Well, folks, we are at a very interesting point now with the Federal Reserve. Important individuals at the Federal Reserve are starting to buckle under the pressure that is going on in the system right now. Fed's Harker reiterates rates likely done, projects an ebbing in inflation. I want to go through exactly what's going on here, why it matters so much for the stock market, why it matters so much for the overall financial markets in general. I want to speak about a ton of different stocks we're going to speak about here today. Some very interesting things I witnessed out there here today. So a lot to get into as always in these videos. I appreciate everybody joining me as always. Thank you for being subscribed, folks. But yeah, I just want to get straight into this because we got a lot to go through, okay? So, breaking market news. Fed's Harker reiterates rate hikes likely done, projects an ebbing in inflation. Fed's Harker, the Fed should hold rates steady for outside of, like, let's say data going way against the Federal Reserve or something like that where things go out of control, okay? Now, what's interesting, if you don't know Harker, okay, he's a big name at the Fed. He's been there for a long time. He's got tenure over most people at the Federal Reserve, actually. He's a president out of Philly. And there's only a few, like, basically presidents in the Federal Reserve in general. I believe there's 10 to 12 of them total, somewhere around there. And he's one of these individuals, okay, out of Philadelphia. He's been at the Fed since 2015, which once again, it just gives him a lot more, I don't want to say credibility than a lot of other individuals at the Federal Reserve, but he just has a lot more experience. So as with everything out there in the world, right, you're always going to look to people that have maybe a little more experience for you, and they're going to hold more weight. It's just the bottom line, right? He's going to hold more weight than the lady that came on in 2022. It's bottom line. He's not supposed to, technically, right? But I can guarantee you, like, if you've been at the Fed for a long time, you're going to hold more weight than somebody that isn't. So it's a big name individual. But there wasn't even, in my opinion, the most interesting thing that came out of all this, okay? I think he's starting to feel the pressure in a lot bigger way, okay? Check this out. He now sees the unemployment rate going up quite substantially. He says the U.S. could see 4.5% unemployment in 2024, okay? Now, he also said he doesn't expect mass layoffs as jobless rate increases. Well, guess what? News for you. Whenever you're starting to get into a dominoes falling the wrong way, you really have no clue where it's going to stop off. So you can say, oh, that's going to be it. It's going to stop at 4.5. Really, you have no clue. That's just bottom line with that. When the dominoes are falling the wrong way, no one can predict, it's going to stop right at 4.5% and that's going to be it. No, that's not how it works. Like, it could stop at 4.5, it could stop at 5, it could stop at 7, it could stop at 10, it could stop at 12. We really don't know once you get the dominoes falling the wrong way. And if you get enough of those dominoes start falling the wrong way, it gets ugly rather quickly, okay? And you're starting to see these folks buckle one by one, and I think you're going to see a lot of them buckle over this next 6 months, okay? And I'll be honest, I'd be nervous if I worked at the Federal Reserve as well. I would be very nervous. We're looking at a Fed funds rate right now that is the highest we've seen in the past 20 plus years, right? And the last time you had Fed funds rate up in these sorts of territories was right prior to the great financial crisis. So if I was at the Federal Reserve and I was looking at the data that's coming in, and inflation's obviously dropped off in an immense way, right? We haven't finished it off yet. It's still we got to finish that last stage here, but inflation's dropped off a cliff. You're starting to see, obviously, a lot of data points that are showing to, let's call it a slowing in the economy in several different spaces. And you're still thinking, oh boy, Fed lag's catching up in 24, 25. I'd be very nervous if I was these individuals. And now they're starting to show real pressure. And that's what's playing out now. And if you think about, right, one of the main things that is causing, let's call it inflation to be higher, it's energy, right? And energy prices. The Federal Reserve can't control the price of oil. They just can't. So if there's some big, huge problem in the Middle East and it spikes oil higher, the Fed can't do anything about that. They could raise rates more. That's not going to fix that problem. And if that causes oil prices to be higher in the system and that causes transportation to be higher, right? The Fed can't fix that. So the Fed's now at this point in time where the Fed funds rate is substantially higher than what CPI is, right? A substantial amount higher. They're looking at energy prices as being one of the only last problems we really truly have, right? And they're saying, oh my gosh, like, what are we going to do to stop this? Raise rates? Okay, raise rates. You're not going to, like, if the Middle East gets crazy, you're not going to stop that. That's not going to help anything. All it's going to cause is a bigger and bigger problem in housing, right? And this Harker guy also talked about housing, okay, Fed president out of Philly. He also spoke about that. And you saw what happened last week, right? When the National Association of Realtors and you saw the home builders and the Mortgage Association all send the Federal Reserve a letter begging them not to raise rates anymore. I'm telling you, when those powerful groups start sending letters to the Federal Reserve begging them not to raise rates anymore, the Fed starts to, I don't want to say panic, but they start to get very concerned about what's going on out there. I can tell you that. Because those associations, those folks hold a lot of power. A lot of power in this country that not a lot of people really realize. And so I'm telling you, they start feeling the pressure in a substantial way, right? And so what I see playing out in the Federal Reserve moving forward, in my personal opinion, okay, what I think is going to transpire is I believe they're going to try to keep rates basically stable for as long as they possibly can. And when I say as long as they possibly can, until really something breaks for real, okay? And I'm not talking about the regional banks, okay? A few regional banks. That's not what I'm talking about break. I'm talking about something happens with a major financial institution. Like if I said that financial institution, everybody watching this video right now would be like, I know them, okay? Not some SVB that no one freaking heard of before that collapsed, okay? I'm talking about some sort of big dog. If you had some sort of problem there, that's when they go into full-blown panic mode, okay? If you had something where unemployment starts to tick up in a substantial way in 2024 for whatever reason, they would start to go into full-blown panic mode at that point in time. And by the time they get into panic mode, they're cutting. But I start to see them getting very scared. They're not in panic yet. But I'm telling you, when these guys start talking the way they're talking, they're starting to get worried. They're starting to get scared. They're starting to realize what they've done and the potential ramifications as Fed lags catch up with us, right? And, it seems like you can't go anywhere without people complaining about inflation, right? We're in that time period now, that awkward time period where the masses have now realized inflation. Back when, in early 2022, right, when I was talking about inflation, when a lot of people in financial media started talking about inflation, when the Fed started talking about inflation, the masses weren't talking about inflation. I mean, I go on Instagram, I see a video of Jimmy Butler, a professional basketball player, complaining about inflation because it's so much to put, you take $200 to gas up his Bugatti or whatever, right? I'm like, what is this, okay? You got freaking basketball players complaining about the price of gas now at this point in time? And it just seems like you can't go anywhere now without people complaining about inflation. I mean, I just randomly come across these posts, right? Feeling nostalgic. So this is in regards to Scottsdale post. And it's just like everybody's freaking complaining. So much has changed, obviously. Moved in May of 1998 from the Bay Area. It was like an extended vacation. $800 for a 1,000 square foot, 2-bedroom, 2-bath, beautiful apartment on the pool. My favorite restaurant was a macaroni grill with a jug wine on the honor system. Dinner for two was $30. We bought our first house, Tatum and Dynamite, for $129,000. The good old days, right? This person says, my first apartment I rented in North Scottsdale in June of 2009 was $1,185 for a 3-bedroom, 2-bath with a garage, taxes included. I hate how things have become, right? And you're just in that moment in time where everybody seems to be complaining about inflation, right? Everybody. And what's crazy about this is everybody's complaining, but you know what? I guarantee you, this person likely has a ridiculously higher net worth today than they did back in 1998 when, things were so cheap, right? And that's the thing people forget is remember where you're at now versus where you were back in the day, right? Where you were back in 1998. These people should have hundreds of thousands of dollars to their name, if not millions of dollars. If they were buying a house back in those days in Scottsdale for $129,000, I mean, that same house today is probably easily, I would say on the low end, $450,000. On the high end, probably $750,000. So if they were paying off that mortgage, they have absolutely sick amount of home equity there. And obviously, hopefully they had some other money, other ways, right? And so everybody likes to look back at time and say, oh, how cheap it used to be. And they forget how much wealth they've gained over the last 10, 20, 30 years, right? I remember my first apartment, if we want to talk about nostalgia, okay? My first apartment, there it was right there. It was the top floor of this apartment building, literally right there, okay? And that was in 2011, I rented that place. And it was $750 a month. It was pretty much like brand new, right? And I would walk down here, and I'd grill up some steaks and food down there and have people over, and I'd go swimming in the pool on a Monday afternoon all by myself, this beautiful pool. It was great, man. It was so cheap. It was so cheap. That same apartment today is probably 2x to 3x the price I paid back in the day, right? But back in the day, I had maybe a few $1,000s to my name when I first started renting that apartment, maybe $5,000, $7,000, right? I'm doing a little better in life. I would say, okay, I'm doing a little better in life. And so that's the part that everybody forgets. So it's like, oh man, things are much more expensive. Well, damn, your net worth should be a lot more than it was 10 years ago, 20 years ago. And if it's not, then I don't know what to tell you. Like, you did something wrong in this game. If your net worth is not considerably higher today than it was 10 years ago or 20 years ago, I don't know what to tell you. Like, it should be dramatically higher, right? I remember going to the Cheesecake Factory with my brother in North Scottsdale. He lived in North Scottsdale, had an apartment over there. And I remember going to the Cheesecake Factory for happy hour in, 2011. And I remember we could go for happy hour and have drinks and have these, $5 appetizers and these burger bites and all these different things at Cheesecake Factory. And it'd be like less than $40, right? And now, heck, I mean, just one meal at Cheesecake Factory is like $20, $30 alone for one meal. Never mind drinks, never mind all the other stuff that comes along with it. But, back in those days, I might have had a few $1,000s to my name. I think I got a little bit more now, right? So this is the thing that people always forget about, right? When it comes to inflation, everybody likes to complain about it, but damn, you better be in a lot better place than we were 10 or 20 years ago. That's the bottom line in regards to that, because there's been a lot of money to be made out there the last, obviously 10, 15 years, right? Now, Treasuries have done part of the work for the Federal Reserve with how much Treasuries have gone up. And I think this is another thing that's honestly freaking them out and scaring them right now, because Treasuries have done so much work over the summertime, really specifically, right? I think the Fed's kind of looking out there and they're like, man, we don't think we really got to do much work anymore now at this point in time, especially given that a big component of what's going wrong in this market really comes down to oil price, really comes down to energy prices. There's not a damn thing they can do to fix that. The Fed can go tomorrow and raise rates to 7%. Okay, they can raise rates to 7% Fed funds rate. What's it going to do to fix oil price? If the Middle East is going to go crazy, there's nothing they can do about that. If oil is going to go to $100 because the Middle East goes wild and things go out of hand over there, what are you going to do? So what, you raise the rates to 7%? All you did was make the affordability crisis even a bigger problem in the housing market, right? Which is already a problem we have. No one wants to move from their homes because everybody's locked in at 3% rates. And they don't want to go get a home that's an 8% rate, which is what you would have to do right now. So no one wants to move. No one wants to drop price substantially. And so go raise rates to 7% and watch mortgage rates then go to 10%. Do you think anybody's going to move then when you go to mortgage rates at 10%? Heck no. No one's even moving at mortgage rates 8%. So you're just going to make the problem worse, which makes affordability even worse, which potentially puts more pressure on rents. And if you put more pressure on rents, that's a huge component, right, of overall CPI numbers. So these are all things to consider, right? And I think this is why the Federal Reserve is starting to get very, very worried, scared. They're starting to buckle. And I think one by one over this next 3 to 6 months, you're going to see each and every one of these folks to buckle. And when I say buckle, it doesn't mean they're going to cut rates, but it means they're going to get in position to start thinking about cutting rates. That's a difference, okay? Thinking about cutting rates, which up until really recently, that hasn't even been a thought process. At least that's what they've told us, right? So that is a whole situation going on, okay? Now let's talk about a lot of stocks. I've got to talk about Palantir, got to talk about PayPal, got to talk about Meta, got to talk about a lot of stocks in today's video, right? Obviously Tesla, my Tesla. So today was a good day for the public count. It was about a $29,000 day here today, right? Go back to that apartment example. When I moved to that apartment, I might have had a net worth of $5,000 or $7,000, right? Today, the public count alone was up almost $29,000. Oh, man, damn that inflation. Come on. Now, in regards to today, a lot of that was carried by Meta, right? Meta makes a big move up, is going to pull the whole dang portfolio up. That's pretty much as simple as that right now when it comes to public count, because Meta and Tesla are such huge weights in there. But you know what I noticed? I noticed it was definitely a risk-on day out there. Fubo led the pack. That is, one of my riskiest stocks I hold. Avant and Fubo would definitely get thrown into my riskiest stocks I possibly hold. If you were to look at the stocks I have shares in, Fubo and Avant definitely among the most risky. Revolve also is seen as a risky stock, and the reason being is, not a lot of people even know about Revolve in the stock market, right? They have one of the best balance sheets in the world. No doubt about that, and their balance sheet's incredible. Certainly of clothing companies, I don't think there's a better balance sheet you'll ever find out there. And they've done tremendous work, but it's still seen as a riskier stock, right? Foot Locker is seen as a riskier stock, and the reason Foot Locker is seen as a riskier stock is because they're in a restructuring right now. And so it was interesting to see a lot of the riskier stocks do well. But what can you derive from this? Can you derive that, okay, it's risk on times? The answer to that is no, because I've seen these stocks all of a sudden go risk on for a day or two and then just drop right back down to where they were previously. So until you see several weeks or even a month or two of this price action, you can't really be confident that we're going risk on again and people are going to want to own the small caps. People are going to want to own the mid caps. We haven't seen it, and we got to see this for a sustained period of time. If we watch football run to $4 or $5, okay, clearly the market's suddenly going, let's call it, into a place that is wants to play in small caps again, wants to play in mid caps, and starts to get more confident about the markets going forward. But until we see that, folks, you can't really derive too much from these moves of 4%, 6%, 8%, because then next thing you know, the next day they're down 4, 6, 8%, or the day after, or something like that, right? What I also thought was interesting is, did you see the restaurants here today? The restaurants, we're having a very good day. Cheesecake Factory is up nearly 4%. Texas Roadhouse up 2.5%. And a lot of people want to know, what stocks I'm looking the most forward to. Earnings this year, or not this year, but this quarter. I'll tell you exactly who. There's a few specific stocks, but the group I'm looking most forward to, restaurants. Why am I looking so forward to seeing restaurant earnings? I'll tell you exactly why. Everybody and the grandma has been talking about the consumer slowdown, consumer this, consumer that, right? I'll tell you what, the sit-down restaurants are going to tell you if the consumer is really starting to hurt, if they're really starting to pull back. Because at the end of the day, fast food places are always going to put up their numbers. But when it comes to restaurants, sit-down restaurants, that's a choice. If you want to go spend, $15, $20, $30 at a restaurant, per person, that is, right? Add that up, with a few people, and that's a big number suddenly, right? I feel confident about my financial situation. People don't go to those sorts of restaurants unless they feel confident about their situation, right? And so if you want to see if there's actual consumer pullback, watch the restaurants. I'm telling you, companies like Cheesecake Factory, companies like Texas Roadhouse, companies like Darden Restaurants, which own Olive Garden, a bunch of other brands, Red Lobster, those will tell you what's actually going on with the consumer. Are they really pulling back, or are things looking very good? Listen to those companies' guidance, okay? Palantir was shockingly didn't move today. I mean, how shocking is that? Palantir didn't freaking move. Now, first off, it was a great day for a lot of stocks, right? Public count was up $28,000 plus. I mean, Palantir, you would have thought would have been at least a little green. Stock didn't move. Now, I got asked about Palantir on the live stream here today, right? Which, if you don't know, I signed an exclusive contract with Twitch to basically live stream on there. And so I was live streaming here today, and a lot of people were asking all types of questions. One of the questions, somebody asked was around Palantir, okay? And, it's interesting because Palantir, if you really think about it, right? Palantir is suddenly the most well-positioned stock in the stock market. It's absolutely incredible, or certainly at least one of them, right? Because you're looking at a company on the government side that you see what's happening in the Middle East now. You obviously have seen what's happening with Russia, Ukraine. The world seems like it's getting more dangerous, if anything. You see the United States getting involved in everything. We're involved in Russia, Ukraine. We're involved in the Middle East, right? If China, Taiwan happens, we're going to be involved in that. And that could be a whole other situation, right? If the Middle East gets messier, we're going to get even more involved, right? I believe we just sent, two of our biggest aircraft carriers, I believe we just sent them over to the region. So, plus we're sending money, we're sending equipment, we're sending all types of stuff, right? So, think about this for a moment. If I had to ask you a question, is there going to be a lot more money or a lot less money spent on military over the next 5 years, just in the United States alone? What would your answer be? I think a lot more, right? What about in Europe in general? Probably a lot more. Well, if that's the situation, a lot of that money is going to end up in Palantir's pockets. Bottom line, a lot of that money is going to end up in Palantir's pockets because guess what? You can't consider anything really military-wise unless you gotta have Palantir as your companion there. Just bottom line. Now, on top of that, you got AIP, which is driving this insane amount of interest, and Foundry that's just driving an insane amount of interest from potential commercial customers, right? And all of a sudden, everybody cares about AI, and Palantir's always been the company at the cross sections of data and artificial intelligence, and having your business be able to make much better decisions based upon your data. Oh my gosh. It's literally two perfect scenarios on both sides of the business at the same exact time. So that's where Palantir, and you're wondering why the hell, has Palantir been such a powerful stock this year? Obviously, getting the profitability has been great. Obviously, the thought of S&P 500 inclusion has been great. And obviously, coming into the year on a very low price for the stock came in, was a good thing. But I'm just telling you, think about the company in 2024. Think about it in 2025. With all this spending that's likely going to come down the pipe here with the military side and with AIP and with Foundry and the commercial side and everything they got going on the commercial side, folks, Palantir seems to be one of the most well-positioned, certainly companies in the financial markets right now, just to be honest, okay? No, I was looking at big tech here today. I thought this was interesting. Apple was actually down here today. And it was a great day for big tech in general, right? A lot of green out there. And so to see Apple red, it makes you ask yourself, could we be at a moment where a lot of people are starting to get scared around Apple earnings? Because if Apple's a red on a very green day for the market here today, there's going to be some folks that are maybe considering like, ooh, maybe Apple's numbers aren't going to be quite all that, right? I was looking at these iPhone wait times, right? I was looking at that this week and I was like, is this really some sort of crazy wait times for iPhone? The only one that I saw that had a big wait time on it, it was like the highest end iPhone, right? Which is always the one that everybody that has a lot of money always orders, right? The celebrities, the influencers, the business professionals, all those sorts of people, they always get the highest end iPhone you possibly can. So I'm looking at that and I'm like, that doesn't give you a good gauge of how iPhone demand actually is. You got to wait another, couple months here, and then let's see how the demand actually is. And I mean, it seems like some of the other iPhone models don't have that crazy a demand. It seems like the only one that's really pushing wait times big is the highest end model. That everybody is always, there's a certain amount of people that always want that one. So I don't know. That was another thing I was kind of thinking about that I'm like, I think there's other people considering this in the market. I think that's why you see a stock like that red on a green day here today for countless other stocks. What else I thought was interesting is, really the riskiest of the stocks I have on that big tech watch list were really the ones that performed the most, right? Shopify is seen as a riskier stock, certainly because of their profit loss situation over the last few years. Snowflake, same exact situation. That was the second best performer. And Uber to Booba stock was also seen as one of those kind of, companies that you kind of look at the P&L and people get a little concerned with the income statement of that stock, right? Compared to a lot of the other big techs. So it was just interesting kind of seeing those ones outperform here today, right? PayPal. So PayPal had a decent day, up 2.2%. And you got to ask, was the lowest low hit on Friday? Is that it? Okay. Is that it? And what is my opinion on that? So I would say it could very well be that PayPal did hit the lowest low on Friday. But something that concerns me a little bit about maybe it wasn't the lowest low is, do you remember what happened last year? Do you remember what happened to Meta last year, right? When Meta went under 150, I was already shocked about that. No different than once I saw PayPal go under 75, I was already shocked about that. And then Meta made its last big move down at the very end of October, and it went under $100 a share. And if I recall the lows, it was like $88 and some change, right? And that was the last shocking hurrah moment for Meta stock. Maybe we get that moment in PayPal. I'm already in shock that it's this low, but you never know, right? Meta was at that example last year of just, you never know. Maybe it has one last hurrah move down and you're just like, I can't freaking believe it's at, I can't even believe PayPal's at 55, but I also couldn't believe that Meta was at 125 last year. And then it went under 100, right? So you never really know. We'll see. I think PayPal earnings are going to be good. I think the CEO is going to have a good conference call ready to rock and roll. But with that being said, you never know, man. Look what happened with Meta last year, okay? So it's always a potential. No, I was trying to see some of these safety stocks. I looked at my safety stock watch list here today, and it was just interesting because, man, are we talking jam or are we talking jelly? That stock was down again today. Another green day. It should have been a day people making money, and yet this stock can't get out of its own way. It's down again today, $112 now, right? Target was down today, down over 30% this year, right? That can't get a green day. Look at WK Kellogg. This is the cereal side of their business. It was down over 8% today. 8 percentage points for this stock, right? These stocks are still just struggling. I was looking at the General Mills, up 0.33%. I was looking at Kraft Heinz, up 0.48%. These stocks still can't get out of their own way, right? They're still struggling even if the market's green. And, I mentioned this in a few videos recently, right? Tax loss harvesting. Now, a lot of people want to know, when is tax loss harvesting most likely to happen, okay? The answer to that is, usually you're going to see from anywhere from mid-November to obviously the last trading day of December. People are running out of time in regards to tax loss harvesting, in regards to these stocks that have been absolutely brutalized this year, which is the dividend category, right? There's less than 60 trading days left in this year, folks. There's actually, I think there's probably 50 or 51 trading days left in the year right now, okay? So if you're going to make a move and you're going to tax loss harvest on these stocks, you got to make it ASAP. Okay, as when I say ASAP, I mean like in the next 50 trading days, essentially, right? You got to make that move, and you got to make that move fast. And so what I see playing out here is I think these stocks are going to continue to be weak. Even if the market goes up, I think they're going to continue to be weak. If the market goes up quite substantially, I think they'll maybe go up, but I think it's going to be very low because I think there's just going to continue to be selling pressure on these stocks, which gives a great buying opportunity. Now, the great news is for these dividend stocks for next year, dude, almost everybody's going to freaking have wanted to sell these stocks has already sold. Okay, so outside of a major stock market crash in general, these stocks should have a tremendous 2024. Because if think about it, if you haven't sold these stocks by the time you get to the last trading day of December, what were you waiting for? Now, if you wanted to get out of this stock, like you've had this whole year where everybody's been dumping and dumping and dumping shares, okay? And so you could have some real buying pressure come in 2024, which could skyrocket many of these stocks in quite a substantial way. And the reason being is just if you have such a little selling pressure on these stocks and you have a good amount of buying pressure that comes in, the move can be pretty darn violent. And keep in mind, you're not going to see these stocks rise 170% like a Palantir or a Meta that's up 100 and whatever, Meta's up 150%, and NVIDIA that's up 200+%. When I say rocket higher for these stocks, I'm talking about 20%, 30%, 40% moves. For dividend stocks, that's crazy. But that's the sort of moves we could see next year outside of a full-blown stock market crash because you're going to have a lot of buying pressure there, and I just think the selling pressure is going to be gone from those stocks. Once again, outside of some sort of epic all-encompassing stock market crash scenario. So that's where we get into a very interesting situation, right? And in regards to today's rally, I was looking at travel stocks, and they just didn't participate. And so, until these travel stocks really start to run, until the small caps start to run, and the riskier stocks, and the stocks like the Fubos and the Avants and those sorts of stocks, and the Planets, until these stocks start to really run, all this is just the market playing around, okay? It's green, it's red, it's green, it's red. I want to see some conviction in this market, and the market just doesn't have conviction yet. When we get some conviction, now do keep in mind, guess what? The market bottomed right around this time last year. Literally, we hit a bottom in the market right around this time last year. You could pull up an S&P 500 chart from last year, pull up the Qs from last year, pull up the NASDAQ from last year, and you'll see literally right around today is when the market's bottom last year. So we'll see how it all plays out. We'll see, okay? Now, obviously, some very important earnings coming the remainder of this week, specifically tomorrow, Bank of America in the morning, Lockheed Martin from the defense side, right? Goldman Sachs, a very important company. J&J, big weight in several different indexes and ETFs, so that's one that definitely matters in a substantial way. And then obviously Wednesdays when we get crazy. Tesla and Netflix, those are the vibe setters for this market. And so if you want a chance for this market to really start going risk on again, we need Netflix and Tesla to come through because those are the vibe setters and we can go sky high. If those ones fall, get ready for some much lower prices for a lot of these stocks in general because those are the vibe setters and those could completely ruin the vibe. And if you're wondering, am I going to cover Tesla's earnings on Twitch? Yes, I will. I will absolutely do that. I'll cover the earnings. We'll probably even listen to the conference call on Twitch as well. And then I'll put together a big recap video for you guys on this channel Wednesday night, likely. But yeah, we'll do the earnings all on Twitch. And by the way, if you're wondering why can't I post on YouTube as well? It's an exclusive contract. So yeah, when you're in an exclusive deal, yeah, they don't really want you posting on other places. So it'll be on Twitch. So if you want to join me for that, join me for that. My Twitch is in the description area down there. I might also have it as a pinned comment down there along with this free workshop I have for you guys. Make sure you access that. It's about a 30-minute video. Should help you out tremendously. How I find 10x stocks workshop. That's a phenomenal one. So I appreciate everybody joining me as always. Thanks so much for being here. Thank you for being subscribed. And also thank you everybody that joined me on Twitch. I was shocked by how many people were on that live today. I was not expecting that. I'm in week 3 of Twitch, and so I was not expecting that many people on. So I appreciate everybody that is following me on there and joining me. I'm shocked, man. I can only imagine what Wednesday is going to be. Whew! Wednesday is going to be crazy amount of people on there. So much love and have a great day.